I said I'm in January, right? Yeah. So there is no month before full retirement age. So that's what happens to me. However, my father, he was born in December. So he'd have the whole year of that in order to make that work. So just some things are just not quite as equal under government programs just because someone had to make a rule, and there it is. Robert's saying not even the IRMA just increases similar to Social Security. Yeah, I know that Medicare just went up recently as well. So I've got some of those numbers too. Now, once you reach full retirement age, the earnings test no longer applies. You can earn as much or as little as you want. It does not affect your benefits any further. Recalculation benefits, any benefits withheld due to the earnings test are not lost. As I said earlier, once you reach full retirement age, your monthly benefit amount is recalculated to account for the months which benefits are withheld. So they're not lost, they're just deferred. Government seized and deferred. I don't know. It's just annoying. Okay, let's just call it that. It's annoying, but that's the way these programs work. Okay, so we talked about the earnings test. Now, but until, and I mentioned this before, until you're claimed your benefit, the benefit schedules will increase by 8% per year until age 70, or the CPIW, whichever is higher. And that's the way that those increases will work. So, for example, if you're retired at 67, but you want to wait to claim your Social Security at age 70, all you have to do is create an income bridge. Where are we going to get the income to fund what you need until age 70 when you claim your Social Security benefit? And part of that could be your spousal benefit on your spouse's earnings. The other part could be 401k, any other savings plans, reverse mortgage. There's so many different ways to create that income bridge. The question is, what's going to work right for you to optimize your situation? That's going to be the key. Okay. So I think that pretty much covers the Social Security part. Social Security benefits are subject to being included in your taxable income based on your other income that you have. You'd think that you would pay into something, the government would give it back to you for free. No. If you have other income, it will trigger a portion or most of your Social Security to become taxable. Now, that does not mean it is taxed at 50% or taxed at 85%. It means that is the amount that will be added into your income for calculation in the tax code. So sometimes I see some posts on social media and say, your Social Security will be taxed at 85%. No, that sounds like more of the government taking all of your benefit. No, it just means that of your benefit, I'm going to make up a number. You notice I do that a lot just to make the math easy. If we had $100,000 of Social Security, you're not getting $100,000 of Social Security. If you had $100,000 and you're at the higher income level already, then 85% or $85,000 will be added in as income to then be calculated to determine new taxable income. So if your provisional income, if you are single, so no spouses at all, 25,000 or less, none of your Social Security will be added back in for taxation. If you're single and your income is between $25,000 and $1 to $34,000, then half of your Social Security is added back into the calculation to determine how much of that will be taxed. They determine that is, the price you get to pay for retiring successfully. By the way, these limits have not changed since 1982, 1983. They do not index for inflation. This is why more and more people are going to have their Social Security taxed. If you're single and your income is above $34,000, then 85% of your total benefit will be added back in to figure out the taxation of that benefit. CBS News, not a big fan, but whatever. So your provisional income is your adjusted gross income, whatever that gross income is, plus tax-exempt interest. Okay, now I've got an ad. See, guys, I deal with this stuff. Okay, it just, you can tell how much I practice. There we go. Okay. Plus tax-exempt interest, plus 50% of your Social Security benefits. I want you to think about this. What about Roth IRAs? Roth 401ks? They say it's going to be tax-free, right? Well, they already changed the rules for this calculation to say it's still going to be federal tax-free, but we're going to add this back in, and we're just going to make your Social Security taxable because you have so much more money in a Roth IRA that you pulled it out. We're going to make that happen. Now, that's not the tax law right now. I predict it one day it will be.